Hello, good afternoon, ladies and gentlemen. My name is Sasha. It's IBM Pod TV network, and we have a financial show for you right now. And I would like to introduce my esteemed guest. It's a co-host, Peter Bennett, former Wall Street professional. Welcome to the show. And founder of the network, Nick Paliveda. Welcome to the show, Nick. How are you today? If you are not there yet, hopefully you will be there
You must
soon.
have had a call.
Yeah, okay. In any way, right now we have market is doing quite well. It did yesterday, and it does today. Follow up. I think it's now sort of stopped a little. They're waiting announcement from the Fed at 2 o'clock, so we'll see which way it will go. Peter, what do you think about the market directions?
Um, you know, I start with I've been talking about inflation, Fed, and oil as a problem for 6 to 9 months, and now the market, at least for the last few days, is like, oh, the war in Russia, is going to in with Ukraine is going to be settled, and everything looks great. But first of all, actually, if you look at the trend line, it's down, down, down with a few zigzags, and this just looks like another zigzag. But I'm not optimistic at all. I mean, I pointed out last week that people thought World War I might last a week to 2 weeks, and we were just talking before the show because Sasha's from Ukraine and he has a Russian background, and he's saying, and I was saying, well, this could be settled if the Ukrainians maybe would give them the lower regions and, say we won't join NATO. But Sasha's saying the Ukrainians are not many Ukrainians don't want to negotiate at all, and that they're starting to win, and that there's 20,000, I've heard this, mercenaries heading over to fight Russia. So this
That,
could go, this could last months or years. Now, the thing is, even without Russia, because these problems in the market have been happening for a long time. And the only difference is I've been talking about them for 6 to 9 months. And now if you turn on the TV, that's all you hear of just for the last 3 weeks or a month. Inflation, oil prices, now it's getting attention this year, but it was always going to happen. And the market is still ignoring where we're going in terms of the problems. And the problem one is inflation in the Fed, CPI, the core producer inflation went up. I'm sorry, consumer price inflation went up 7.9% in February. It's continuing in March. It was in January. This is a very high inflation rate, and even excluding energy and food, it was up 6.4% in February. These are not good numbers at all. And so, by the way, Jeff Gundlach, who's a famous hedge fund kind of guy, investor, he's saying that it could hit 10% this year, inflation now,
yeah.
and it easily could. And this was happening before Russia. Whatever happens with Russia, Russia's just going to make it much worse if this continues. But he's saying that he could see oil going to $200 a barrel or higher. And so the bottom line, and by the way, the Biden administration, oh my gosh, I understand to a point. You want to lower CO2, and if you're arguing for the need, I understand it because, it's arguable that, and many people believe in global warming. I think there's evidence that there's a potential big issue down the road, potentially. So, but they are not even talking to oil executives, first of all. They're not even trying to dialogue with them, like, what can we do for you? They haven't even had a meeting scheduled. So they have no interest at all in lowering the price of oil. They're only talking about, and their policies are very anti-oil. Now they may want to argue, okay, we're going to raise the price of oil because then it makes solar powered panels and electric cars more efficient, although I don't quite understand that since electric cars run on power that has to be generated by natural gas and oil, but it does help the solar industry. The solar stocks have been doing well. So the bottom line is they have no interest. The reinforcements are not coming. The oil industry has is very interesting. There's a quote from the Barron's this week. It says that investors and financiers are telling oil and gas producers not to pump more, and to stay within budgets. Investing in shale drilling has been a losing bet for a decade because of overproduction. Drillers just figured out how to restrain themselves. Still, with Joe Biden not doing the Russian thing, that'll create more Russian shortages. But that's what I've been saying for a long time. The oil and gas companies are putting less in capital in because they're going, look, if we're not going to be in business 10 or 20 years, we're not going to create one of these cycles where we've been losing money for a decade. Some of these oil stocks were disasters. Even some of the pipelines were really poor. So they're saying, we're not crazy. We're not going to, pump it out. But here's the thing, too. And this is really interesting, too. So this is the prediction from the EAI. I'm sorry, Energy Administration. And you can barely see this little line here, this top part that's very light above where my finger is. But basically, they're forecasting a little bit more growth in 22 than last year, increasing. But also on the same chart, they said right here, they said the only growth is in the Permian. So I'm not going to try to point it out, but it shows all the other shale production in the United States has been flat since 2013, even when they were trying to raise it. So the Permian is generating it, but it's not peak oil exactly, but sooner or later we are going to run out of oil and energy, and oil especially. It doesn't last forever. So these companies going, we're just not going to produce more. So with all these fears, I'm very conservative. As we talked last week, you were, I think you said 14% cash, I'm 12% cash, maybe more now. I must be more, because not only did I sell RHS, the consumer stock, last week, but I actually reduced TELUS, which from 5% to 1.5%. Now I like TELUS, but I liked it at 17 and 16, but now it's at 25.5. It's got a 4% dividend, and I looked at the cash flows for the next. It's actually negative cash flow right now because they're expanding. But even after the expansion, I don't think they're going to grow a lot. I think it's probably safe. It's hard to get 4% even in anything, but I'm not going to take that risk because the downside of the market is huge. And I have a question I'm going to raise to you now in a minute. But so this is a story about the Fed, and that in the 70s, the Fed was behind the curve and, on fighting inflation, which they have to do. Some people are saying there's going to be 5 or 6 rate increases this year. They're so far behind on trying to control inflation. That's why we have inflation by definition. And they don't want to upset the apple cart. But, the apple cart is also going to be upset by inflation. So it said, this article in Barron's this last weekend said, in 1974, the Ford administration had a one-day conference on solutions to soaring prices. By December of that year, the Dow Jones was down 45%. The Dow Jones Industrials were down 45%. Those are solid companies. So there's more downside than upside. So you have to be very cautious. And that's what my question was going to be. So I was hoping Nick would be here too, but here's my question. Let's say there's a 4% or 5% shortfall in gasoline in the United States and worldwide. But what price does the price of oil have to go, the price of a gallon of gasoline have to go to in order for people to reduce their driving by 4 or 5%? And I actually have a poll on what people are going to do, and I'll tell you that in some of the predictions. But what price do you think it has to go to? Let's say it's $5 in some state now, because each state is different because of the taxes. But what price do you think it has to go where people will give up 5% of their oil?
$12.50.
Wow. Oh my gosh.
That's
That was even
an easy one.
higher. That was even higher than I thought. But so this is the thing. Oil consumption is inelastic. That means that when the price goes up, people don't give it up a lot. And I've been saying that before. I've been saying, look, a lot of people have enough money, and they're maybe even retired, whatever. They're not giving up they're driving. Other people have to drive to get to work. So there was some poll out there. The one the one that this is a Reuters poll, a recent poll, and it said um, only nearly half of Americans say that gas prices will impact how they spend their money. Um, at so at 54% say they're going to cut back on restaurants. 49% they're going to cut back on entertainment. 47% say they're going to cut back on home improvement. 46% say vacations. So what does that tell you? Oh, and it says most people are not willing to buy an EV, electric vehicle. That's because they cost $51,000, $57,000, and their prices are soaring through the roof because of mineral shortages and Russia going on too. But so it says, adding to this, it says only half of Americans would consider planning a vacation closer to home if prices go to $6 to $7, but have not changed their mind about canceling their plans. So basically, people are not going to say, "Oh, I can't drive. I'm not going to go to work," or "Oh my gosh, I'm retired and I'm going to stay at home even though I have money." So the bottom line is, I don't know if it's $12, but it could be. If you look at the predictions, Gunlook is saying $200 plus. Wells Fargo said 138 a barrel, and Goldman said that, but many analysts are saying over 150 a barrel. And I think it could go even higher, because I read something that said that if you took the last energy crisis and equate it to today's dollars, back in the 70s, it would be about $200 a barrel. And people are using less of their budgets now because of energy efficiency than they used to, for heating efficiency in their homes, energy efficiency in their cars. So it could easily go to $200 a barrel, 150. It's hard to say, but it could go. It could even be. I read one person saying they think it might go over 300. But so we could be looking at 6, 8, 10. Maybe you're right. 12. I don't think it could be 12. 12. People are going to cut back at 12 because it'll just drive.
That's exactly the question. You
Yeah,
asked me at what price people would start
I
cutting
know. Well,
their
you could be
price.
right, but
That's
imagine if it goes to 12, what it's going to do to the economy. I mean, we already had recession risk because the Fed has to raise the rates. They have to raise the rates because that's how they control inflation, and they can't just sit there. And so the market's weird because they say, oh, they only raised it a quarter point, and that's good news. They should have raised it half a point because they're just further behind the curve on what they have to do. And the longer they wait, the more inflation is going to continue, and get a mindset. You get a mindset of, okay, I need a big raise because to pay for inflation. And then creates a cycle with labor, and there's labor shortages anyway in so many areas. So it's not good for so many stocks, for the economy, for Europe. Forget it. I have almost no European exposure. Even that's one of the reasons I'm nervous about the consumer staples too, because that they have European exposure. And Japan, you have to be extremely conservative in your investments, and I've whittled it down from maybe 60 to 30 last year, now to maybe 25 stocks that I feel are low debt and they can survive. But it's brutal. It could be really brutal. I mean, we could be looking at 20, 30, 50%. And the market's up the last 2 days. Everything's perfect. It's, Stephanie Pomboy said today on Fox Business, she said the market's happy because of Russia might get settled, which, based on what you were saying, I see it more and more. It could go years, this Russia thing. The Ukrainians are being stubborn for right or wrong. The Russians are being stubborn for wrong. So who's giving in? And they're stalemated militarily to a good point. And so Russia would just be on top of all these other issues, which would really, maybe it will go to $12 a barrel. Then people really cut back, but stocks are not going to be.
Peter, there are several reasons why gasoline will not go to
No, I
$12.50.
don't think it will.
I'll tell you, primarily reason is now all world, even US, understand that there cannot be reliance on Russian oil anymore, or even Arab oil or whatever oil. So what they're doing now is they're sourcing the development of oil and gas right on US and Canadian soil and making deals with such unpopular regimes like Venezuela, Iran, and some other stupid ayatollahs, just
Yeah.
to get things to relieve that. Because the war, Russian and Ukraine, is concern number one right now. But number two is shortage of oil supply, and I think that will be dealt with in next, I'd say, 2 to 4 weeks. It's very, very focused.
Let me tell you why I don't think it's going to work. First of all, Venezuela. What happened is they socialized, the government took over the oil industry. That thing is a mess. They are in collapse. They've lost their labor, they've lost their knowledge. They can't just turn it on. It's going to take probably years to rebuild to get a lot of more production out of it. It's you can't just say, oh, we're going private again, and they're not private anyway. So a bunch, maybe they'll try to pump some more oil out, but they lost a lot of their support from capitalists, and they can't just go in and say, oh, now we're going to all fix it. And besides, Venezuela's heavy oil, which is the same as in Canada, which is not necessarily going to be useful for many purposes. And Iran could help. Then again, first of all, it's Russia that's negotiating with Biden. I don't know how he's letting them. The Russians are the ones negotiating for Iran on their side. It's like maybe they have other incentives to begin with. They like high oil, but also Iran's probably been shipping oil illegally to a lot of countries and been shipping to China. And so they're not necessarily going to raise
Because
it.
it's happening because of the sanctions, U.S. sanctions, right? Once the U.S. sanctions will be lifted and Iran can
It
trade
will
with
help.
anybody, and Russia is is gone. It's no longer the factor. Russia is
Yeah.
going to be in next few months. Russia will be completely isolated from the world economy. It
Well, if
will
that
be
continues,
healed. It's a
yeah.
toxic territory with the toxic people. It has to be isolated completely.
Well, it is, right? It
Even
is.
more so than North Korea. Even
Right.
more so. So once Russia is isolated and all different oil supplies, including Iranian, including many others, will be developed and take over. Now, overall, my outlook on stocks, primarily as a part of economy, of course, is everything, Peter, what you just said, everything, 100%.
Mhm.
It's already been known for the last several weeks, if not months. So there is no new factor in play except the war, Ukraine and Russia. But even that cannot affect the oil supply or uh, all the economic development in the world, because if you take high-tech companies like Apple, AMD, NVIDIA, um, or chip developers like Qualcomm, for example, or so on, how their business can be affected by war between Ukraine and Russia, I don't believe that they could be really affected. Now, my other thinking is that all the negatives, including the war, were already in play on the market for the last several weeks. So the stock went down because of all this negativity, gloom and doom, war in Russia and Ukraine, or so on. So everything is already in stock prices. So
Well, you have
what?
more
Now,
faith in the market than I do.
furthermore, furthermore, the
Yeah.
because of this steep downturn, a lot of investors, especially those who are buying stocks on margin, they were already separated from their money. Period. They have no money and no stock. So what's
Well,
happened? What's
unless
happened?
they get a lot more people get separated by their money soon.
Now, what's happened? Look at the market yesterday and today.
Right.
Market went extremely higher,
Yeah.
really, almost instantly. You know when it's happened?
Because they think that the war in Ukraine is
No,
going to
no, no, no,
settle.
no, 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 no. I'm much simpler man.
Okay.
I'm watching the flow of capital. There are no sellers. That's why the market went up. Well, if you
Maybe.
have a buyers like pension funds and or investment index funds and everything is going in, so individuals could say, "Oh, great time! So stock went up 10% or so. So sell it, make money." They can't sell.
Wait.
They
A
don't
few.
have stocks.
Wait, let me address a few
Get
points
out.
you said. First of all, if you're right about, I'm saying there's going to be an oil shortage without the Russia situation, but Russia was the number two or three producer in the world of oil. And if they're really isolated like this, Iran can produce the most they ever produced was 3 billion a day, 3 million a day, and Russia was producing 3 million a day. Now Iran is still producing now, so I don't know. I'd have to look. I guess it shows in 2020 they did two, because I'm looking at a chart here. So if they go, I do take it back. In 1975, they did five, but since then, the most they did for from 1990 on is about 3 million a day. So
Okay, that's a good
let's
number.
now they're doing two. They may have sanctions, but they're doing two. So wait. Follow the math. Minus the oil shortage was already going to have problems. The market, but now subtract 3 million from Russia, and even if Iran comes back to the peak of where the highest they've been since 1990, that's plus one. That's minus two on top of a market that was already going to be minus two or minus three.
Peter, look a little bit further though. If the oil prices will remain as high as they are now, or move even higher, like maybe you're right, 130, 150 a barrel,
Yeah.
can you imagine that if Iran is no longer sanctioned, how many oil companies and how much money will flow into Iran to develop its industry?
Well,
Same with
they haven't
Venezuela.
been over 3 million barrels a day since 1975. They had plenty of incentive when oil was high. And you know what? They were actually only. I'm looking at this chart here. I don't know if you're going to be able to see it well, but look at this chart. This
Yes.
is from 1975. It's
Okay.
almost flat until the sanctions hit. But it was flat at 3 million from 1990, 95, 2000. They can't produce more, or they don't want to, because they don't want to use up all their oil at once anyway. They have to.
Peter, how do you think Russia went up to producing 3 million tons?
I don't know how did they go.
How? When Soviet Union ceased to exist, they had reserves of oil, very rich reserves, but they
Right,
had no technology to develop them.
right.
So once the Soviet Union dissolved, a lot of American, primarily
Yes, I know
oil
this.
company
True.
went over there.
Hmm.
Halliburton, especially oil equipment, they have none of it.
Right.
Period. So now with the sanctions, that neither Halliburton or any other strong oil suppliers can not longer work there.
This is true.
BP left Russia. They had
Hmm.
20% stake in joint venture out. All other companies are out. So, what do you think, Russia? Their equipment will start
Yeah, you're right.
obsolete in next 3 to 4 months. They need spare parts. They need technology. They will have none of that. So, as a part of the world economy, Russia is finished.
Yo, I'm not.
Oh,
I don't disagree
bye
with that.
bye.
Especially if Ukraine, this war goes on and doesn't get settled, which it doesn't look like it very well may. But you know what? That was my point back to Venezuela. The same thing happened in Venezuela. The U.S. companies pulled out. They took the land. They socialized it. Their production went floored. They're not going to say, "Oh, poof, it's all back." The equipment got old. The pipes got old. Everything is, it's their technology. They don't have the employees. And by the way, the oil industry is having huge problems itself, because there's a shortage of labor in the oil industry. They're having supply chain issues too. It's not like you say, "Oh, let's just fix this pipeline." Oh, wait, it's going to take months to get these parts. Everything is jammed up. It's not easy. Even if they wanted to invest that much and try to stimulate it, they can't. So there's so many problems in the energy industry, and energy drives the world. And look, I don't know where it's going, but I would not be surprised to see 150 or $200 a barrel. or even higher. And that scares the heck out of me for the market because one, the Fed is going to be keeping raising rates. They have to. And that's every time they raise rates, you're saying, oh, people won't sell. But first of all, we discussed this last week. Nick and I was saying too that you have a lot of people who don't have a choice to sell. If you're a mutual fund manager or an index fund or whatever, and people start redeeming, it's like, oh, I'm scared. The market starts going down, as it has, by the way. Look, the S&P, it looks, oh, it's great, it's a blip. But as I said, the chart is almost straight down, but with little blips along the way. This has happened since the beginning of the year. The S&P was at 478, now it's at 432. So it's basically what 45 points, 10%. It's down 10% in less than in 2 months, 2.5 months. So this is the way the market moves generally. It never goes in a straight line. It's not a perfect straight line. It goes zigzag, zigzag. So you have a couple of up days. People say, well, I'm going to get in, sentiment changes. But at least the news is reporting they think, and maybe it's wrong, they think Ukraine's going to settle. But I don't think it is based on what you're saying.
Well, some people are operating from the position of contrarians. And there is opinion now that there is so much gloom and doom in the market, and all these factors, $200 oil and inflation and Fed and the war and everything else. And in that situation, there is no way to work market neither way but higher and higher. And I'm expecting
You could be right.
I'm
Nobody knows.
expecting a huge melt up. The Dow Jones going up to 75,000 and 7,500, and the S&P will move 20-25% higher from here, and Nasdaq could move probably 40% higher from this point where we are in.
Really?
So,
Wow.
so you know what? Again, simply because the weak hands are out of the market. They were all being clobbered. All these buyers of GameStop and AMC,
I don't think so.
wonderful
We'll
stuff, they're
see.
all out. Period. So they
We'll see. A lot of people have never experienced a bear market before. The last big bear, well, we had a bear market in 2008. People got scared, but also nobody's experienced inflation before like this. What if we're in a cycle where the Fed has to keep raising rates? Every time the Fed raises rates, the Fed has been protecting the market, and the Fed has been um, inflating the market basically by keeping rates low because people say, I have no place to put cash. But wait, what if I can now buy a 3% treasury instead of a 2% treasury? Maybe I might put some more money into treasuries, and say, you know what, I'll just lock in a 3% treasury because in my IRA, particularly, because I could say, you know what, it'll last a lifetime, and I think the market's not going to do well in the long run with demographics anyway. So it just look, it's competing for assets right now. There's no competition for the market. There hasn't been in the past. Where do you put it? You put gold. It's iffy. It hasn't even been a good inflation hedge.
cryptocurrency is the way out. Cryptocurrency. In fact, there are a lot of talk about
That's
that
going to collapse.
Russia could circumvent the sanctions by
I know.
buying stuff for cryptocurrency or so on. I'm not so sure how it will work
Which
out.
is why, by the way, the Biden administration, which they were always going to do anyway, Biden put in an order that said that in the next 3 months they're doing a review of all crypto,
Mhm.
and where they talking about is doing a U.S. digital currency, and that's what I've said all along. All these countries, 90 countries, were already developing digital currencies. So, since Bitcoin is no longer secret as of the last infrastructure bill, you have to pay taxes on it, and you have to keep records of it. Once there's a digital currency alternative in the US, now why would I have Bitcoin when I can have something backed by the US government? So as soon as if they put that out now, the Russia thing could accelerate that too, because they could say Russia's trying to deal in oil and Bitcoin, but they should always have banned Bitcoin. They should have done this years ago. I've said it. You can't allow private interests to create money. We've discussed this previously. There are now 7,000 Bitcoin crypto producers, not just Bitcoin. 7,000. It's doubled every 2 years. If you say the people, you can, go to your own home and create some money, and we'll just allow you to do it. You have no control over the reserves. You can't control taxes. You can't control, um, the money supply at all, which is the same. I said that, but also you can't control illegal transactions very well. You have to monitor it. Why should the government allow this? They've never allowed it before. If I was a government, I would have banned it a long time ago. But they're doing this
Absolutely.
3-month study now, and it's not going well for crypto. By the way, it's down to 38 or 39 last time.
Peter, but I have a question. If crypto indeed have power to become so more and more popular, and a lot of people will start buying and paying with crypto, so on, then the question is, who needs US dollar anymore? Just
Well,
keep
but
it.
who
We
makes
have
the laws?
crypto.
Right. But who makes the laws that wants to protect the US dollars? The people who make the laws want to protect the US dollar. That's what you're saying if you think it out, because you say that's why they can't allow this, because now they say, okay, dollars aren't anything, everybody's using Bitcoin. That's the last thing they want. The government can't allow this. No country.
There's another threat to US dollar, and that's if
Oh, I
it
know.
indeed go much lower, then I agree with you, oil can go to 130, 50, and
Oh,
200.
that's another factor.
You know why? Because Russia and China, they were working together very
I know.
quietly for the last several years. But now it all comes to the open. They want to replace dollar as a reserve currency, and they want to trade on themselves with their own currency like yuan, a ruble.
Yeah, you're right.
There are some challenges though, because ruble went down now to buy one penny, one
Oh, I
US
know.
penny,
Yeah.
you need 125 rubles. So there are
Right.
some challenges, mind you.
You're right. The US dollar has always
We do.
been threatened by the fact, look, the deficits. But the problem is, see, this is the complicated thing. Because look, the U.S. deficits are out of control. In 2026, I haven't mentioned this maybe last program, but I'm always saying 2026, the Medicare reserve fund goes negative. They're going to have to print so much money. They've been spending the money from that was supposed to be saved for Medicare and Social Security, and they've been using it to pay the debts. Now they have to print money because to not only to pay for things that they've been using the Medicare money for, they've been dipping into it, but now they're going to have to pay money out for Medicare. So, but the problem is why it gets complicated for an investor is because, okay, so the U.S. government is bankrupt pretty much, but so is every other country in the world, because the other countries in the world the U.S. has promised hospitalization for free, for the U.S. But by the way, the consumers have to pay for their Part B medical care and basically their doctors and drugs, and part of their drugs, or their drugs really. So that's going to hurt the demographics a lot. As people get older, they're going to have to spend their stocks and their money on these raising costs for medical. But let's look at the rest of the world. China, which has terrible demographics, by the way, for medical care, but also Europe, everywhere. These countries also have not put away a penny for their medical care, and they provide full medical services for older people and everybody. So now they have to pay not only for the hospitals, but they have to pay for the doctors and the drugs for everybody as they're getting older. So this is why it's an unsolvable problem in a way, because what it probably results is maybe worldwide inflation, but then what country is safe? I don't know. At least the U.S. has oil, and a lot of these other countries don't even have oil. So, and also, it's very difficult, but I'm U.S. centric in my investments for sure.
I forgot to mention one more thing about Russian ruble is that today Russia is defaulting on its
Oh, is it?
payment. Yeah, it's they have a couple more hours, but they offer to pay that in rubles.
I heard it.
Very politely or decline.
Yeah, that's what people want. Please pay me in rubles. It's like
Absolutely. And we'll see how it goes. So I think China will have not a lot of incentive to charge Russia for any goods in their local
no, I
currency.
don't think they're going to accept rubles. They'll accept gold.
Yeah, They will, Russia still has physical gold, believe it or not. So
I know they have reserves.
now the goal number one for China is extract as much gold.
Yes, get all the gold out of
And
Russia.
Russia will have no oil, no gold, no rubles.
They'll take gold. That's about it, though. until Russia runs out of gold. Then what? But it's a very complicated
Cash.
system. Politicians have
You,
messed things up
you
so
were trying
badly
to
in
buy
so many ways.
some Russian rubles or
I
something.
tried. My broker, TD Ameritrade, would not allow me to buy Russian rubles. Stop
Yeah,
me. I
I'm
wanted
not
to buy it when
surprised.
it was like 7 or 6 cents.
Well, good thing you
You
didn't
know,
buy it. It's less than a penny now.
no, it was actually less than that. I think it was 6/10 of one
Oh, six
cent.
tenths. Okay.
Okay, I mean it was really down 7/10. Now I think it's up to 9/10. Anyway, here's what was my goal, Sasha. I was going to put so much money in rubles. I was going to be a Russian millionaire.
Oh,
Yeah,
there you go.
absolutely.
You could be an oligarch.
I was
But
going to
Sure,
say,
and then they're
you
going
would
to come.
run,
oh, well, those are done. Yeah, I'm a
you would
Russian
run,
millionaire. I have million
you would
dollars,
run,
million
you would
rubles.
run into danger
What's up?
to get under U.S. sanctions for being Russian oligarch.
I will be.
You would get
That's
in
what I was going to say,
actually,
Sasha. You
actually,
know what?
that's what
They're
I was
going to
going to
come
be.
for you,
I was going to
Nick.
be a
They're going to come for
Russian
your canoe.
millionaire. I say I have over 1,000,000 and rubles.
They're
I'm a
going to come for
Russian.
your condo and your canoe.
I know, yeah, condo and canoe. That's right. But this is something interesting, Peter. You keep bringing out, and we bring it up in all our programs. And here's my question to you guys, and I'm going to start asking around. The Medicare insolvency in 2026 is kind of a known fact.
Sure.
And have you seen any other media shows? Because
No.
we're eventually going to have to be fully blown on Roku. We're going to have our own Roku. We already have a Roku channel. We just got to build it.
Right.
So we have all our shows on it, which is a technical problem, which is we're working on. But all the other media programs I've listened to so far, no one ever brings this out. No politician brings it out.
I know.
Medicare and so, wouldn't you think this is an important topic to bring up, Peter?
You'd think so.
Medicare is insolvent in 2026. Now, this week, we're going to have Congressman, she's actually running for Congress, U.S. Congress. Jeanette Skinner is going to be on Economics Monday with David M. Walker. I believe that's the show she's going to be on, yeah. Because she was on World Edition before. Now she's going to be on that one. And we're trying to be nice. She's a Republican from Florida. She'll probably win, believe it or not, be a congressperson. And she's involved in healthcare. That's her specialty. Okay. To me, this is a great question to pose to her. Well, I'll invite you to me. I don't know if you're going to be able to make it. It's Monday at 11
No,
o'clock.
I know. I can make the Monday Economics
Right.
Monday
Yeah,
show.
it's Economics
Which
Monday.
week? This coming Monday?
It's this coming Monday. She was scheduled.
No, I'll make that show because I want to hear what she has to say.
I want to hear what she has to say too, because I'm going like, when I listen to this and I'm paying, I got to write a check to Medicare again. At first, they sold it to me. Medicare Advantage, everything's free, everything's free.
Oh, no,
First thing I did is I got a $500 bill. Now I got another $500 bill. It looks like I'm going to spend at least $2,000. Not everything's free. What are they talking about? The salespeople, were
do a show on that. But that's
we really do, because
I don't recommend that.
I'm right now into the Medicare Advantage plan. I'm not really sure how advantaged it is.
Nick, I'll talk to you offline about that. There's trade-offs.
Yeah. But right. But the thing is we're looking at Medicare insolvency in 2026. Come on, Peter. This is going to get worse.
Wait. But the one thing I would say, but I'd be interested in her knowing, but I think a lot of politicians know it or have been talking about it for 30 years. But the thing is, it's not like people don't want to hear bad news when you're a politician.
Sure.
So it's like, what are you going to do? Say, people do mention it occasionally, but these economic shows, nobody was talking about oil going through the roof 6 months ago. And the markets are efficient, but once in a while we can think of things that they're just ignoring, for the present. Now the focus is on Ukraine now, and now so time will pass. And let me get into two dividend stocks.
Yeah, we need to get
because we're running late. We try to keep it shorter. Now these are two very speculative dividend stocks, and I don't usually do speculative dividend stocks. So I want to say, first of all, the first one I'm only 0.25% of my portfolio, and the other one is 0.5%. But they're both really interesting stocks. So because they're high yield and they have potential. So one is CVR Partners, and the abbreviation is UAN, UAN, and they produce fertilizer. And first of all, they have a big advantage because most fertilizer companies get their natural gas from. They use natural gas for all their fertilizer. UAN uses a type of petroleum coke for almost half of their production. So they actually have a cost efficiency there. Right now, the stock is yielding 9 to 12% dividend, depending on if you look at the last dividend or previous. But based on the last dividend is 12, but based on the last year, it's 9. It's a variable dividend, so it can go up or down. It's speculative because it's a very cyclical industry. So right now, if the numbers were permanent, you'd go, this is fabulous. And it could be very long term because they've got, by TD Ameritrade says 7.5% price over cash flow, which is like a 13% cash yield. E-Trade says a 29% cash yield. So, and now with Russia situation, fertilizer is going to be even more value, even though their cost is going to go up. So the fertilizer business, it could be dangerous to have a reasonably high amount of debt, but it could also be a hold for life with that kind of dividend. So again, I'm only 0.25%, and I held that in less than 0.25% slightly, and I have it in an IRA because I don't want to deal with K1s, and a little bit in an IRA is okay. You don't want to have more than $1,000 in UBTI. You can look that up. I won't cover it now, but it's unrelated business income, and so you don't want to have more than $1,000. But a little bit of yuan at 9%, you know what? It's worth a gamble in these days when it's so hard. The other one is even more interesting and crazy in a way because you don't usually see this thing. It's called ZIM, Integrated Shipping, ZIM. So this is an Israeli company that's in shipping around the world, integrated shipping. So the stock is around $88. They just announced a dividend. You ready for this? $17 dividend, which can still be collected. I think the ex-dividend date is a few days. So I figured I'm really buying the stock at, in the 60s or high 70s because I'm getting that dividend anyway. So based on that last dividend, it's a 79% yield. And their cash flow, according to TD Ameritrade, is either 55% cash flow yield or E-Trade has them at 77%. So because of the demand, supply shortages, they've been doing tremendously well with pricing. Now, this is another cyclical business. This one, I also put in an IRA just because I'll grab the income from it and not pay taxes on it. And you've got a very cyclical business, but I'm guessing this will last a long time, this supply shortage. So, and that it's a well-run company with a reasonably low amount of debt. So maybe I'll get a 79% dividend for life. But again, I only put like 0.1%. But these are two very speculative stocks. But both of them could be lifetime holds too, with huge income if they work out.
Great. Peter, thank you so much for showing us your great investigative talents and find very interesting indeed ideas in these troubling times. And we'll see what the market will tell us. And let's get ready in about 15 minutes announcement of the Fed, whether it's
25 we'll see.
50. I think it will be 25 most likely, but we'll see. We'll see. We always can. If 25, the market could still go way much higher from this point on. 50.
I don't know. I think they might just say, okay, now we know it's a 0.25 point. That's the history. Now maybe we'll tank because we know it's all bad news from here. Look, if the Fed has to control inflation, which is going to be for years, that's the last question. Where are rates going to go? Look, if the long-term treasury's at 2 and they need to control inflation, and now it's a flat yield curve, by the way, which creates a recession risk. But where do they have to go with interest rates to slow this inflation bomb?
It's to me the factor is not inflation, it's just a number. The most important thing for me is the movement of stocks. And in my opinion, all the bad news and oil and treasuries and everything is already priced in. So in my opinion, what most likely will happen, that the market will have a melt up, it will go up like crazy. And only then that it will suck everything and everybody, every last penny from every household, then it will crash, then there will be blood, and then will be a real correction. People will start screaming.
And when do you think that'll happen?
When? Oh, next few months, for sure.
Next few months.
Next few months, yeah. But
Okay.
it has to
You know what?
be
I think
much
it's quite
time.
possible because again, people don't know where to put their money,
But
and
next
you know,
move, it has to go up tremendously. That every single person, whether you're a truck driver or you are doing, you're a nurse in the hospital or you're a Uber driver or what, regardless what you do, you must spend all your money, whatever you have available, to buy stocks. They will
you know what?
they
I'll
will
give the
go
opposite. We have
much
a bull and a bear here, and I'm usually pretty bullish, but I'll give the bear. I think there's going to be a gradual and slow decline,
It's
maybe
not
to
going to
plus,
work, Peter. It's
and
not.
then there's going to be a really quick
It
fall.
worked 30, 40, 50 years ago, true. Now, with the lightning speed, when you get a margin call, you have to settle margin call next day by 2 o'clock. You
I know.
see, so this is the beauty of technology, is that it will wipe out so many people and so quickly there will be so much blood and screaming. So then stock will get into strong hands,
Well,
including
either way, we agree that in 6 months, right now, you want to be in cash if you look at a 6 month
absolutely.
horizon, which is the
Yeah,
way I look at things. I
absolutely.
don't try to predict short term, but so all right, we'll see. It's March 16th, and we'll see where the market goes from March 16th to April 15th. My guess is it'll be a bit lower. Yours, you think it'll be a bit higher,
Will be
but
higher.
that's what makes it for a market, right? Bulls and
That's
bears.
exactly that's what makes a market.
But the most important thing is to be in the right stocks because I'm not selling all my stocks. I'm just
Agree.
holding stocks that will do well in a debt environment, energy stocks and high dividend stocks, but only the ones that now I've been picking out, which have low debt profiles for this week's potential high income with, that could survive an inflation scare. So
Exactly. Preservation of capital, rule number 1, rule number
exactly.
2, and rule number 3.
Exactly.
Okay, thank you so much for today's program. All the best and good luck with your trading, and we'll see you next Wednesday. Bye bye, everybody. It's a program, Investment, Modern Investments, IBM TV, Pod TV. Bye bye, everybody.